This is System Trader Show, episode number 4.
Welcome to System Trader Podcast. Listen to interviews with top traders and find out how the most successful traders beat the markets and what are the secrets of their success. This is System Trader Podcast with your host, Jack Lempart.
Today I have a great pleasure and honor to chat with Andrea Unger. He is the only trader winning the World Cup Championships 4 times. Until now, no one has achieved such thing except Andrea. He is a fully systematic trader, and in this episode he describes why he has chosen such trading approach. In this episode he talks about his procedure for building and testing mechanical systems, how to know when risking more is pointless, and many other topics. What I like especially very much in the way Andrea talks about trading is that he's extremely honest. He's not promising an easy way to quickly get rich via trading, but on the other hand, he's a great example that a passion and hard work significantly helps to be successful on the market. I hope you will enjoy the show. Hi Andrea, and welcome to my podcast.
Hi Jess, and thanks for inviting me. It's a pleasure to be here.
Thank you so much for having you here today. Could you please tell us a bit about yourself, especially how it happened you became a trader?
Well, it's a long time ago. I am a mechanical engineer. I have no specific experience in the financial markets, but in the period, in the late 90s, when I was working in some companies, I had friends, colleagues, and we started investing. We started buying some shares, some stocks. Because of rumors, you know how things work. Somebody who knows somebody else knows the uncle of somebody and so on. And they suggested to buy certain stocks because they were supposed to go up. And you might remember what was going on in the late 90s, especially in 98. And then afterwards, during the dot-com bubble, stocks were going up. So we bought and we made money. We thought to be very, very smart, and very expert. And this is very dangerous when you start like that, because when you start making money, you think things are easy and simple, which are not. So we went on, and then suddenly it happened that we started losing money. Things did not go as we expected anymore. And this was disappointing. It was disappointing on one side because of the money we were losing, of course. And on the other side, it was disappointing because we felt wrong. We felt we made something wrong. We didn't understand something. So I didn't quit. And I decided to study more in depth what was behind the whole world of finance, of trading, let's say. And slowly I started to read forums. In year 2000, internet was already there, of course, but not that big as it is today. But I did find some places where people were discussing about trading. So I started to know about technical analysis, all things like that. And I liked it. I got the feeling that in trading you could make money based on your skills, on your real skills. If you were good, you could make money. If not, you would lose. And I liked that. It's not always like that in companies, because when you work for a company, a big institution or something like that, it's not easy to stand out and show how good you are or how bad eventually, and to get the right returns from this. While I felt that in trading it was, I don't say easier, but more logical. If you do things wrong, you lose. If you do things right, you make money. So I went on studying. And on a certain day, I decided to quit my job, because in that period of time, I also found some instruments on the Italian exchange, cover warrants, and these were sort of options. They had some problems. The market makers quoting had some problems with their software, so that all the quotes of these instruments were delayed. They were late by 15, 30 seconds. And this allowed people like me who were able to calculate quickly what the right price should be to actually make some arbitrage, which means to buy things you were sure a couple of seconds later would be at a higher price. It was sort of a video game, Space Invaders against the market maker. And I did make money. On the same time, I realized that the market makers would probably change their software or do something to avoid being attacked by people like me who understood things were not in order. And I started studying something else, so how to go on to survive in markets. And I thought, based on my mind, I'm a mechanical engineer, I have a mathematical mind. I decided to go for automated trading. I mean, automated in that period of time was meant as getting the signals from some algorithm. So I decided to build my trading systems and to do everything based on the trading systems that I would have built on a local base and then put it to work on the market. So I was born as the trader I am today. I was a child in that period of time. I mean, I was already in my 30s, but in the markets, I was a child. Sometimes I feel I'm still a child in the markets, actually.
All right. Very interesting story, Andrea. Thank you for that. So you said that as you have some engineering background and, as you said, mathematical mind, so you decided to go into the systematic trading rather than discretionary, although you started as a discretionary trader, as you said. Do you think that one is better than the other? So, for example, that the systematic approach is better than discretionary one?
Yes and no. I mean, for me, automated approach was definitely better. I felt that it is a much better way to cope with your emotions, because when you trade on a discretionary base, you obviously have to be active in the markets, during the markets. And when you sit in a position which shows a big loss or a big gain, I think emotions play some tricks, and not always you do things properly. You make decisions based on that very moment, full of stress, and you might be wrong. When you build trading systems, the trading system is working, so you don't need to make decisions in the specific moment where things are happening. You do everything before. On the other side, you have also to consider that when you build a trading system, you get much more numbers to rely on because you are backtesting your idea. You are putting everything inside the set of data you have, and you see what happened in the past. It does not mean that what happened in the past will for sure happen in the future. But at least you see if something you think should work actually worked. It's a good starting point. So you have some metrics to rely on to see. You say, okay, this is what happened. I'm expecting more or less the same. So when you put everything live, you can have some parameters to refer to say, oh yes, things are going as I expected. Things are going properly. Or, oh, wait. There must be something wrong because here everything is completely different from what I expected. So, I mean, you have more information, in my opinion, from the systematic approach rather than from the discretionary one. Another thing that I think, I've always said that, in my opinion, if we take two traders, the best systematic trader in the world and the best discretionary trader in the world, and we put them at work, I think that probably the best discretionary trader will end up making more money. This is my opinion. But I know that I will never be that best discretionary trader. Because in my opinion, discretionary trading is much more related to a specific talent that somebody has. So it's more difficult to teach and to learn on the other side what to do in discretionary trading. While in automated trading, of course, you need some talent as well because you have to understand if you do things well or not. But it's easier to teach it. I can teach you how to build systems. I can teach you the method I use and you can apply it and then you can follow up. It's much easier to transmit it. So there is no necessity, in my opinion, to become the absolutely best trader in the world, but you have to choose the way where you believe it will be easier to become a decent trader, at least. So if you say, okay, I go there because I think there I can learn how to do things, obviously you go where the best school is, let's say. Not the best school because you got the best teacher, but the best school because you learn things that probably are easier to digest and to use. Because discretionary trading depends too much on the human being using it. And the human being is something that, in my opinion, is difficult to teach. If I have a specific talent, I mean, if I go to learn how to play football and I go to Lionel Messi, I don't believe I will become a better player when I go to the coach around the corner. Just because some skills that Lionel Messi has are hard to transmit because they come from inside. It's not something where he says, look, you just put the foot like this and you do things like I do. Because if it were so, everybody would be like him, of course. So in my opinion, it's better to approach trading looking for systematic trading because you have higher chances to learn how to trade really.
Yes, very interesting. Definitely, I will go back for more things on systematic trading within this interview. But before that, I have to ask you, sorry for that, about the World Cup Championship of Futures, because you are so well known as a winner of World Cup Championships of Futures in a row a few times. So could you please tell us what was the primary driver for you so that you decided to start in a World Cup Championship of Futures trading?
Well, the challenge, of course. The challenge because I like to compete. I like to take part to competitions and to measure my skills. So the challenge to go there and compete against other traders from all over the world was the primary driver. Because, trading might be boring. Don't think that if you sit there and you make money, you are happy and relaxed. You start getting bored because you don't know what to do. So a competition is something that thrills you a bit and gives you new emotions and new targets to reach. So that kind of competition was the most important in the world, obviously something that helped me in that. Then I decided to try to win it 3 years in a row because nobody ever did that. And then I won the 4th time because I was sort of invited to participate again after some problems that the broker had over there. And then at the end of all this story, I also understood and found out that it's thrilling, but it's also a lot of stress. So I decided definitely to quit and no longer to compete in that because after some years, the markets are becoming more and more difficult, we can say. So the stress related to trading is huge. And also even worse, obviously, if you think doing things in a competition. Once, in 2004, I was attending the $1 million challenge in San Diego from Larry Williams. And somebody asked him about the competition he won in 87. He is the record holder in terms of percentages. And he said his answer was that probably taking part to that competition was the most stupid thing he ever did. I didn't understand that, And when I decided to participate and to go on for the 2nd year, for the 3rd year, the 4th year, I felt well, and I really didn't recognize me in his statement. But today, after I decided no longer to participate, I probably understood what he meant. Because if on one side that's competition for him, partially, and for me especially, helped to be known and to see my face out there in front of the people as a reference and so on, I also know that it was a lot of stress, and the message that comes out from that kind of competition sometimes can be misleading, because when you see the competition, 2008, 672% in 1 year, people think that trading is easy, simple, and extremely lucrative. They think that you can make a lot of money. I made a lot of money in 2008, but a competition is a competition, and risk is taken to a very high level. I never trade my personal main account in the way I traded the competition account. If you see 100 meters by Usain Bolt, you can't think that you go to run and to run that fast, because that is Usain Bolt in the 100 meters, the Olympic Games. So you get misled. Probably you won't ever think, if you are not a young boy, that you can run that fast, because you understand it's not your reality. It's a different reality, a different world. The same is here. Trading is one thing, and the competition, the challenge, is a small part inside this world, a very specific, extreme part. If people understand that it is an extreme part, then they can start from the right point. The important thing is not that I won the competition. The important thing, if somebody wants to rely on me as a mentor, is that I won 4 years, because in 4 years you can say, okay, I think that you have a method that works. I believe you have something that shows consistency, because everybody can win one competition. Actually, if you are lucky, you win one. If you win 4, probably either you are extremely lucky, the luckiest man in the world, or you have something that works, obviously. I hope you believe it's the second I said.
So would you be able to say, because as you said, the competition has its own rules, and for the sake of competition, you have to take a extremely high risk. So would you be able to, but on the other hand, you won so many times in a row, so we cannot say it's just a pure luck. Would you be able to say then what portion of your success in the competition comes from pure luck, due to the extremely high risk you had to take, which could wipe you out, right?
Well, I can't say how much of it. I mean, I can't say 50% is luck or 10% or 80%. For sure, luck was part of the game, because I remember 2008, I was in a drawdown, and I was in a very strong drawdown. So probably if at a certain point during that year I lost one more day, which could happen, I would not have enough money to go on trading. I mean, to cover the margin requirements. So the fact that on the right day I made some profits instead of a loss, which is a pure coincidence, that is luck. Of course, I had right strategies. I was able to trade them. I was able to position size properly. But sometimes, if things happen on a specific moment, you are lucky, because on another moment they would be useless, maybe. So actually, luck was definitely part of it. Luck needs to be helped, and I think I helped my luck in providing my commitment, my strategies, my market analysis, and my approach that considered for sure the need to risk a lot, but still not to risk too much, where the too much means something that would definitely kill your account in case a minor thing could go wrong. I think that there are some percentages of risk that are in any case excessive. It's not true that increasing risk, you increase the potential of profits. There's a limit above which you only increase risk and you don't get any higher chance. So to know where that helps in designing your position sizing, let's say.
Right, that's very interesting what you said, that there are some limits on the risk. So if we go beyond this certain risk limit, it's not wise really, because we don't take anything in return, but we just only increase the risk. Just one more question in terms of the World Cup, because I know that you had to modify your approach or even systems quickly multiple times. So basically it was not like you had just one system and you just put risk on the highest level possible and you were waiting until you will win. So how do you know if there is a moment when the system doesn't work anymore, or the system may still be used, but let's say you have to re-optimize it or you have to tweak it, modify. For beginners, I think the systematic approach I see here may be very problematic, that at some point they would like to change something and they will try again and again new systems, because they will not allow the system to see its full potential, because they don't know if it's already not working, and they are not maybe patient to wait until it will work. So what is your approach? How do you know when the system stopped work and you have to modify it?
I don't think there is a specific number to give us an answer, of course. And this is part of that talent I mentioned before, where also on systematic trading, you need some talent to see things differently. So sometimes it's just a feeling that things are not properly working for a specific system. As we want to be systematic traders, we need to put some numbers in place to make the decision. So it's important that you put some numbers in advance, in a plan, to say, if these levels are exceeded, I will stop my system. As I said, there is no secret number to make this decision. You need to put something in place just to make your decision in a quiet mood, so that you say, okay, I reach the number, I stop it. You don't have to decide during the word. One thing I did in the past was to calculate a Monte Carlo simulation of the returns with a single contract, and then to calculate the average drawdown and the standard deviations related to this. And I made the decision that I would stop a system if the drawdown was exceeding 2 standard deviations of that average. This was pretty much good, and it helped a lot. And at least it gives you a reference point, different from the 3 times the maximum drawdown, things like that. I don't do this anymore today for a simple reason. Today I have so many systems. I have over 200 systems in my portfolio, and every month I have a software that builds a ranking of these and tells me what systems should work for the coming month. So let's say I have 50 systems at work. This system, this ranking method, obviously takes those which are supposed to be the best systems in that moment, based on recent performances. So if a system goes broken or dies, it will simply be out of the ranking. So I don't risk to use something that is broken, just because I take the best. That's the point. During the championships, it was a bit different, because the capital you use on the championships or real money stuff, so you have your money there, but it's not a big money. You normally start with now with $10,000. When I started, it was $15,000, the starting balance. With that amount of money, you cannot trade too many stuff, because you don't have enough margins to trade many instruments. I started with 4 trading systems on 4 different instruments in 2008. As you mentioned, I had to change them in 2009 because the markets were changing. After the shocks of 2008, we got a reaction to move differently in 2009. So I changed some systems, but I changed the system. I didn't tweak the parameters. I believe that tweaking parameters is dangerous. You only risk to create overfitting on your system, just to get results which you think are good, but in reality you are, let's say, taking a picture of the past, of the best past you would like. So when a system simply does no longer work, or at least doesn't produce any more performance, it's useless, in my opinion, to play with the parameters, because you will only get something that is a perfect picture of the past and not something that will work in the future. You have to change approach. You have to understand what's going on in the markets, why that system is no longer working. Are the markets changing? Is this market changing? Because every market has a specific identity. So is this market changing? And in 2009, the DAX was changing compared to the behavior it had in 2008. So I had to figure out what was going on. And I did. And the championships helped me to be fast in understanding what's going on in the markets, because you have to react immediately. And then slowly I increased my skills adding new systems in new markets. So in 2010, for example, I understood that the key was to cover as many different markets as possible. I started adding commodities, crude oil, for example. So I put together things on completely different markets so that if for some reason one market changed, most probably the others would not change to the same extent. So that I still had something that works. And this was so important. That's also the reason why today I have so many systems, because I want to cover as many markets as possible, as many different markets as possible, because I want to have a real complete diversification, let's say.
Right, I understand. So you're not looking for a perfect system. You just want to make sure that the system works.
I don't think the perfect system exists. This common speaking about the system which works on every market, every time frame. I think this does not exist. I never found something like that, and it's useless and silly to look for something like this, because it doesn't exist. Come on. It's like looking for the perfect man or the perfect girl. Many people would like a specific girl or a specific man, but some people would not. So actually it's the same thing. Or consider the time frame as the age. So the teenagers will probably like a pop star, while older men prefer probably a more mature person, and so on. So it's the same thing in the markets.
I understand. Thank you for that, Andrea. How do you then develop and backtest your systems? I know it could be a very long answer here. Actually, we could dedicate probably a separate interview for that. But do you have any specific checklist or procedure which helps you to create a robust strategy? I know, for example, that you're not using the walk forward analysis in your.
No, I don't. No.
Yeah. Although there are some known traders who are using this approach. Could you please describe a bit more your approach to the system development?
Yes, just mentioning, starting from the end. Yes, for example, a very good friend of mine, Kevin Davey, is using work forward analysis, and he's doing it very well. So I don't mean it's right or wrong. I simply don't use it. I base very much the decisions based on my experience. So I look at the results of something and then try to understand if they make sense. But I do have a procedure, yes, because this is in line with what I said previously. Developing trading systems is something that can be taught. I can teach it because there is a procedure, there is a method. So I have some basic scripts, very simple scripts, with some breakout rules or counter trend rules or rules to discover common behavior in the markets. I apply these scripts to a specific market, and then I start playing around with the inputs, not to find the best thing that works, but to understand how things change when I change the parameters. Just to give you a stupid example, if I decide to trade a breakout for a trend following approach, let's imagine on an intraday base, I might decide to start placing orders only after a specific time of the day. So I might test what happens if I wait till 9 o'clock, till 10 o'clock, till 11, noon, and so on. And I see how the results change. Looking at how they change and analyzing the differences, I might understand that that market works better on a trend following base after, for example, 11:30. Just because I might understand after 11:30, the market is more stable in its moves. Before 11:30, the moves are dirty, are, let's say, wasted by the volatility of the initial hours of the market. This is just an example, of course. So all these things, I optimize not to look for the optimum, but to understand how the results change, and I try to, let's say, read these changes to understand what the market is doing and so to understand what to do to do something properly for that specific market. So this procedure is, I start from a basic script, I play around with the script, following a procedure with time of the day, different filters in terms of chart patterns of the previous days, for example, up to 5 days before. I have a set of patterns so that I see how the results change depending on how the market showed to be configured during the days before, and so on. And reading all these results, I put something together that is my system, the end result of my system.
And now, short break for our sponsor of the show, Candle Scanner. Candle Scanner is a technical analysis software package created for investors interested in candle patterns. What makes Candle Scanner application exceptional is that, from the outset, it has been specifically designed for the detection of candle patterns. It is not just an add-on to an existing analysis platform, but a specialist charting application written by people with an extensive knowledge of the topic of candlestick patterns. It is suitable for both seasoned traders and complete beginners. With Candle Scanner, you can do the following. Quickly scan candlestick charts to find all occurrences of candle patterns. Measure the efficiency of patterns, that is, are they working as you expect them to? Build trading strategies based on candle patterns and simulate transactions. And soon, define any custom pattern you want, then scan the charts and measure its efficiency. And all this without any coding. Please visit candlescanner.com for more details. I've got also a question, because you said that your portfolio is very well diversified, so you are looking for a very broad portfolio of systems and markets. Are these markets mainly the regulated markets, the futures market, or you are also maybe trading on, let's say, for example, on Forex market?
My aim is to diversify as much as possible. I do trade futures markets today because I am lucky that I have enough money to trade any instrument out there with no constraints. So I mix index futures, I mean S&P 500, DAX, Nasdaq. I mix currency futures, as said, Eurofix future, British pound, Japanese yen, Australian dollar, Swiss franc, and so on. I mix energy commodities, crude oil, gasoline, heating oil, natural gas, then grains, soybeans, wheat, corn, soy meal, and metals, gold future, silver future, copper, platinum, when what else? Bonds, of course, 30 years bond, the euro bond, and so on. I mix all this because I don't have constraints. You ask if these are all regulated markets, but I don't have anything against the Forex. In my opinion, Forex offers a very good opportunity, I mean Forex and CFDs, for people who are not well capitalized. So they would have many constraints in trading the futures markets. Not because of the leverage that Forex offers, but because of the downscaling that it allows. You can trade lots, mini lots, micro lots, so you can trade as small as you need on Forex. And this is, in my opinion, a huge advantage. So for me, not needing that today, I don't need to trade it. But if people trade with an account of, let's say, $10,000, they might well choose Forex and eventually CFDs on certain instruments just because they can scale down. They can trade as small as they need based on their risk profile. I recommend always to start from considering the size of your position based on how much you could lose. And obviously to keep this as small as possible. Obviously to lose small, you need to trade small. And on Forex, you can trade small because you can open very small positions. So in my opinion, there is nothing against. The only thing that is important, obviously, on Forex, if you decide it's good for you, is to choose the right broker. Because brokers today are many out there. And in my opinion, the aim is to find a broker that is honest, a broker that is really your business partner, and not those who are simply offering the best commission or spreads, or, I mean, it might be the same case, but first, always check if that broker has a good reputation in terms of being honest. It means once you want your money back, be sure that broker pays the money back. Be sure the broker doesn't play tricks. Read the reviews you find on the internet. Read as much as possible. Don't stop only at the best offer from the broker. Look more in depth, analyze what happens, and be sure that what you choose at least has a good chance to be a good choice.
Yeah. Thank you, Andrea, for that. By the way, are you also trading maybe still on the Italian market?
No, I started in 2007 with some systems on the stock market, and then I had a system on the futures, because I passed from stocks to futures also because it offered more diversification. Then for some reasons, I'm not trading today the Italian index future, just for technical reasons, because I have an infrastructure where I get the data feed from IQ feed. I'm not promoting this, I'm just saying what I'm using. And they don't cover the Italian market. So I don't have the data feed from them. And to get the real-time data from my broker, it has not, in my opinion, the quality that I need to trade with. So I just quit it and stay with futures, which I get from my data provider, DAX, for example.
Okay, thank you. You've mentioned about the position sizing when you were talking about the Forex market, and I think that indeed it's a thing which is maybe not so widely discussed, that Forex is allowing the better position sizing for especially people who are not so well capitalized. You have written a book on position sizing. Unfortunately, it's only in Italian. And although the topic seems to be so widely and broadly discussed, I still have an impression that this area is undervalued by so many traders, especially the ones who are just starting their trading career. What is your current approach to trading when it comes to position sizing?
Yes, you're right. I think people don't consider this properly. But if you can't read my book in Italian, please be aware that it has been translated into Chinese, so you can read it in Chinese. In any case, yes, I was astonished that also talking to some traders, big traders who made a lot of money, they did not all of them had a clear approach to position sizing. Too many were simply measuring the positions in terms of margins, but only a few were starting from the concept of how much they were putting at risk with a position that was opened. And I believe it's very important to understand this. Position sizing opens a complete new world in terms of possibility to size your positions, of course. I believe that I put a lot of that in the book. I believe that it's useful, even though sometimes there is even too much in all the theory, because at the end you need to choose something that makes sense. Today, I do it in a simple or complicated way, depending on the points of view, having many strategies, and many of these are completely different among themselves in terms of type of trading, time horizon, and so on. So I simply look at the historical worst day for each of these. And this is my parameter to size the position, wanting to limit this. So I say, okay, this strategy historically had the worst day with a single contract of minus $2,750, for example. Well, I want that this does not impact more than 1.25% of my balance. So I look at my balance. This is the money I have. How much is 1.25? Let's imagine, just to make an example, $6,000, for example, okay? Then how much was the strategy losing? 2,750? Okay, how much is it? 6,000 divided by 2,750? It is 2 something. Then I round it to the closest integer, which is 2. I trade that strategy with 2 contracts. I do this for all the strategies I have. Well, I have a slightly more complicated procedure, but this is the concept, which is the important thing. And also the numbers I say are my numbers. I don't claim that 1.25 is the best choice. I don't say 50 strategies is the best choice. These are the numbers I use for myself based on my approach. That's it. So I believe that it's in any case important to do things in the right way, to try to keep the risk a bit under control, to keep the disasters under control, so that you know that if that and that and that happens, you would be hit but not killed by the markets.
And what do you think about the optimal F? Can we use this somehow in the real life trading?
No. I think the optimal F, which is the percentage of risk that theoretically maximizes your returns based on the past performance, that is the famous limit I was talking in the early part of this interview, where I said there is a limit of a percentage risk above which you don't get extra benefits in your potential returns. But because once you go beyond that limit, you harm your returns. This is the optimal F. Because of the curve, of the theoretical curve of the optimal F, if you risk more than the optimal F, you won't get higher results. You get worse results. So if you know, for example, that for your strategy has an optimal F of, let's imagine 26.4%, you know that if you risk 27%, you are damaging your potential returns. So in any case, I would use optimal F as this information. What is the maximum that makes mathematically sense? Once you know that, you can know where your limits are. Obviously, I would stay much, much far from those limits. I mean, if it's 26.4, as I said, I would stay at 1/10 or 120 divided by 20. I don't risk more than 2%. It's crazy. So, I mean, in a competition, you say, okay, I want to risk more. When 26.4, I can risk 20%. I will never risk 25. It's too dangerous because that 26.4 is calculated on the trades that happened in the past. But that exact mix will never happen again, of course. This is clear. For some reason, it could come out a better result, which is not likely. But normally, things in the future happen worse than in the past. So the 26.4 in the future would probably become smaller. So that's the reason why I would not even go close to it. For sure, I would never use the optimal F as my risk parameter in the strategy. It's only a reference point to look at and to stay far from it.
Okay, thank you, Andrea, for that. Do you think that currently it's more challenging to be profitable as a trader than it was, for example, 10, 15 years ago?
Yes, I think it's more difficult because markets are getting more and more efficient. On one side, you have a clear advantage in the technology today, but on the other side, this, let's say, increased efficiency in technology led also to an increased efficiency in the markets, and therefore many edges that worked in the past today are weak or weaker or disappeared. If we go back to the 80s, the famous turtle traders, they were working on a Donkey and Shell breakout, 20 days high and low and so on. And that was making a lot of money together with all the position sizing rules they had. But today, the same approach does not lead to any performance close to that, simply because the markets changed a lot. Today, a breakout is much weaker than it was in the past. So either you go on new, let's say, emerging markets or new developing markets, such as Chinese markets, for example. By the way, Chinese markets are already very big and with big volumes, but they are still in a development phase compared to, for example, the mini S&P 500. By the way, you cannot trade the Chinese markets from Europe, but it's just an example. So, obviously, it's more and more difficult to find working edges. Also because what happens that if a trader comes, he looks into the information which is available today on books or courses and so on. And all this information is based on the past. So you read about setups that worked in the past, but today those setups most probably don't work the same way. So you get a lot of information about things that worked but are not working anymore. So it's harder to put something at work, especially if you are a new buy, you don't have clear ideas. So yes, I believe it's more difficult today. And we don't have to be confused by Bitcoin or things like that made a lot of money. That is something that happens once every N years, something specific, special, but it's a complete strange novel what happened to Bitcoin. If you purchased Bitcoin in 2011, you would probably never keep it in your pockets till today. That if you did, you also know that this is something very special. It's not something related to markets. It's something that happened, full stop. So it doesn't have to be confusing. To get an overall consistent approach today is more complicated than in the past, in my opinion.
Okay, thank you, Andrea. By the way, are you maybe trading cryptocurrencies as well?
No. No, because as said, I am an automated trader and I didn't get access to the crypto markets.
Okay, I understand.
From an automated point of view. On the other side, those markets were moving in a very strange way and young way. So there was not enough history to allow me to make any decent discovery of them. And the moves they were making were too illogical from my point of view, so that I could well do something there. But the only thing that made sense, in my opinion, was to invest. I mean, to buy a number of that and then to forget about it, because depending on the moves they would make from a trading point of view, I really could not know what to do. What happens if it drops 30%, which was possible? Shall I put a stop loss or shall I wait? I mean, I didn't know what to do. So not knowing what to do is something that I don't like. I always plan my activity. So that's the reason why I decided to stay out from that kind of markets.
I understand. Andrea, if someone would like to start trading, is there any specific method or market you would recommend to start with? How long you think it takes to learn to trade if someone is really starting from the level 0?
Level 0, it takes a while, in my opinion. You have to be patient. In my opinion, you should first try to understand the different instruments to have a proper knowledge about what you do, because the real risk comes from not knowing what you deal with. They say derivatives are dangerous. They are if you don't know them. But if you know what they do, then you keep them under control. And you have to decide what markets you like best. Stock market is good, but it's normally a bit expensive, because if you trade small, commissions are heavy there. If you have to trade small, you can choose Forex, CFDs. So you have to choose the right broker and then to start studying, understanding what these markets do. I obviously suggest to have an automated approach because I believe that you put together many more numbers. I believe you should choose some good educational material and then stay with it for the beginning at least, because new buys normally start learning something, then they switch to the other thing, they switch to another. Trading is not something that will make you rich tomorrow. Forget about it. If you look for money, it's the wrong place to be. You have to love this. And if you love it, you will grow inside trading and then you will get what you want. But it's not something out there just to make money. So you have to look for some education and then to stay with that education, unless you really believe that the approach is not coping with your personality. But if it does, for example, a mechanical engineer should definitely study trading systems. This is my opinion. While an artist, a painter or so, he might look for some good discretionary trading mentor because they are more, let's say, artistic in that way. But you have to look for somebody to help you at the beginning. It's not because they have the secrets you're looking for. It's just because this will speed up the process to learn. And time is important to some extent, because if you get the right mentor, I think that in a couple of years you can become a good trader. Also, much depends on the time that you have to dedicate to trading. If you study 10 minutes a day, it's different than if you study a couple of hours every day, of course. This is clear. But I think in 6 months you can build a proper knowledge, and then you need some more months and years to grow with it. It's normal, as in everything. To take it to a good level, it takes time, of course.
I've got a few more questions from podcast listeners. And the first one is, are you making some breaks in trading, closing all the positions and being full out of the market for a while?
Well, not completely. I might decide to switch some systems off on markets, on those markets which might be affected by a special condition. For example, when there was Brexit or the American election, then there are some markets that could be affected by the volatility that could derive from that. And as those moves are not predictable in any way, I would prefer to stay flat because I don't want to be there not knowing what to do. But apart from this, normally no. If there is no specific need to stay out, I don't. I let the system work because I never know when systems make money. And it might be exactly when I decide to switch them off.
I understand. And are you maybe also trading in a discretionary way, or you are absolutely 100% systematic only? That's another question from my listener.
In theory, I'm 100% systematic, and my systematic trading is completely systematic. Then I like to discover new things and to see new things, and sometimes I place some discretionary trades just based on my own thing, but it has nothing to do with that other kind of trading. So I might trade some options or things like that, but this is something parallel to the systematic trading. Me as a trader, I'm systematic. Then I play sometimes with discretionary trading.
Okay, I understand. And I've got the last question from my listener. How do you cope with the psychological aspects of trading so that you control your emotions, especially on the bad days?
I have many bad days, believe me, because I don't ever trust anybody out there teaching trading who claims to make a lot of money, because all those who claim a lot of money normally are tricky, because there are losses and the end sum is positive in my case, but the periods are not always the best, of course. And this is something I know is there. I know it's normal. These are the costs of my activity. So I have to borrow them and to cope with it. I mean, I know it's absolutely normal. Of course, sometimes losses are worse than normal. This happens. And this is a problem because you start doubting about all the activity you did. Then what helps is to think about the past, all the other periods where things went wrong, and that then passed and my equity went to new highs. Systematic trading helps a lot because you have a system that works, and you can also check if the performance is in line with what you expect and things so on, if a specific system is doing bad or doing decently or simply doing break-even. So it's easier, and it's also easier because you don't have to make decisions during the trading activity. So the systematic trading helps, but it's only a matter of experience. The experience is telling you that you have losses, you will ever have losses, and losses are simply part of trading. So accept them if you are convinced that you made a good job in preparing all your systems, of course.
Okay, thank you very much, Andrea, for that. So it seems that we've covered all questions prepared for you today. Do you maybe have anything you would like to mention before we finish today's podcast?
Well, again, I want to stress the fact that those who approach trading need to like this. They need to, I don't say love trading, but like everything related to the financial markets, because this will also help in all those moments where things go wrong. Because if you love what you do, you stay with what you're doing. I mean, you don't quit just because you lost a single cent. Don't expect to be rich in a fast and quick way. Don't do this just to make a lot of money. Don't imagine yourself sitting on a Lamborghini and or in front of a swimming pool with some nice drink. This is a wrong perception of trading. Trading is a good activity. You can make money. You can make a lot of money in the long run, but you have always to stay extremely humble. You have to stay humble and always respect the markets and the activity itself. Don't look at this as a slot machine. It's something that has to be built properly, and building it properly takes time. I chose the systematic trading. You can also have a look at my site, ungeracademy.com, where you find some free stuff, videos, articles about trading, all about systematic trading. And be careful. Be careful. Find your own way and try to discover if trading is really something for you. Because if you have a feeling that this is not for you because it's too much stress, it's strange, whatever, don't do it. You don't need, the doctor is not telling you to trade. So stay away from it, because trading can be even extremely dangerous. Dreams become nightmares sometimes. I know it because I know a lot of people. So be careful. Respect trading. Stay humble. Stay really quiet and prepare yourself properly before doing anything with real money in the markets. And what is even more important, trading should never be the solution to your financial problems. Don't think that if you lost your job, you can start becoming an online trader and solve all your economical problems. It's not the case. Trading is a serious job, and as a serious job, it needs a lot of time to be prepared. A medical doctor does not become a medical doctor in 2 weeks online course. This is important. So treat trading properly if you really want to become a trader.
Okay, thank you, Andrea. You've mentioned about the Unger Academy. So if someone would like to learn more about you or to get in touch with you, do you think that this is a good way to do that, the Unger Academy?
Oh, yes, Unger Academy is the site I prepared there. As said, there is a lot of free stuff. We also have a Facebook group, ungeracademy.com, and meeting point for traders. Of course, then there are also some paid courses, of course, because I have this as a side activity to trading. I'd be requested to do so. So I built it up properly. And if somebody wants to become a systematic trader, I think it's a good place to go, but it's not the only one. I mean, I will never tell you I'm the only one who is able to do it. You have to evaluate my material and decide if you like it. If you like it means if you think you can learn something from it. If you believe that my messages are not right for you, then you can easily choose somebody else. Don't look for those, please, who promise richness, because those are probably some scams. But there are many other good mentors out there, so you can easily find somebody. As systematic trading is what I do, and I have plenty of experience there, coming from all the mistakes I made. So if you want to avoid the same mistakes, probably you will find some good advice on the ungeracademy.com site.
Okay. Andrea, thank you very much for your time and sharing with us so many valuable stuff. I do appreciate it very, very much. It was a great pleasure and honor to have you today. Have a good day and all the best.
Thanks very much, and ciao from Italy to all the traders listening to this podcast.
Ciao, bye-bye. Thank you.
Ciao.
That's all for today. I hope you enjoyed the show. I encourage you to visit my website at systemtrader.show/004, where 004 goes for the number of this episode. You can find there some notes to this episode and you can comment it as well. Thank you very much for your time. I wish you happy trading and goodbye.